Welcome to the deep dive.
Yeah.
Today, we're doing exactly that, a deep dive into a specific source, the Daily Alpha Report. This one's from June 17th, 2025.
Right. And these reports, they're really designed for quick insights into the crypto market, packed with data on institutional flows, trends, what's coming up.
Yeah, they are absolutely packed, which honestly can be a bit much sometimes.
It definitely can. So our goal today is really to be your guide through this particular report, the June 17th one. We'll pull out the most important bits, try to explain some of the jargon, and basically help you get a quick handle on what this source sees as the key movements, the big developments happening in crypto right now.
Like getting the concentrated version without wading through everything.
Exactly that, cutting through the noise.
Okay, perfect. So let's jump right into this June 17th Daily Alpha Report.
All right, so first up, how does the report see the overall market state? Their big take is that institutional flows are, well, really dominating things right now.
Dominating. How so?
They point to a pretty significant number, $1.9 billion in weekly inflows.
Wow, $1.9 billion.
In a week.
Yep. That's, fresh capital coming in, and the report suggests it's mostly from the big players, institutions.
Okay, that's a huge amount of money flowing in. But the report makes an interesting point about the retail side, doesn't it?
It really does. Despite prices going up, they specifically note that the usual public excitement, that retail euphoria, it's just not there. It's absent.
Huh. So price up, but retail not really jumping in yet.
Exactly. And the report actually calls this a bullish divergence.
Bullish divergence. Okay, what does that imply, according to them?
Well, it means the price action is strong, but you're missing that classic sign of a potential top, which is often, lots of smaller investors getting overly excited and piling in.
Right, the FOMO isn't kicking in broadly yet.
Precisely. So the report sees this as a, and I quote, classic setup for continuation. The idea being the rally might have more legs because it's built on, let's say, more solid institutional foundations rather than just retail hype. Interesting. So institutions are buying, the crowd is hesitant. How does that translate into their risk assessment?
Well, because of that dynamic, they flag the overall risk level as high.
High, like warning bells.
Not necessarily high like crash incoming, more like the market is being very selective. So the high risk means you need to be careful where you focus.
Okay. So what should the focus be, according to the report?
They really emphasize focusing on two things. Protocols that are actually generating revenue, like real income, and plays directly linked to that institutional adoption trend we just talked about. Follow the money, basically, but also follow the value.
Got it. Follow the real business models and the big players. Does the report give specific price points they're watching?
It does. For Bitcoin, they put the price around $106,845. They note it's consolidating trading sideways above that 106K support level.
And the target?
Short-term target range mentioned is $110,000 to $111,500.
Okay, $110 to $111, $5K for Bitcoin. What about Ethereum?
Ethereum's around $2,585 in the report. It's testing support between $2,500 and $2,600. But the target they list is quite a bit higher.
How much higher?
They're looking at $3,200 to $3,500 for ETH.
Wow, that's a big jump from current levels. What's the rationale there?
The report links it partly to options market positioning, traders betting on future prices, and also, crucially, to some massive whale accumulation we'll get into shortly.
Okay, so options in whales driving that ETH target. And Solana.
SOL is around $153. The report explicitly ties its potential to accelerating institutional adoption.
Makes sense with the institutional focus. Target for SOL.
$180 to $200, and they mention this is based on approval momentum.
Approval momentum, likely hinting at things like spot ETFs or similar products getting closer.
That seemed like the most plausible read, yeah. Progress on those kinds of institutional investment vehicles.
Okay, so the big picture is institutions are in charge, retail is quiet, risk is high, meaning be selective, and we have targets for the majors. Let's dig into that smart money movement. What specific institutional or whale actions did the report highlight in the last 24 hours?
Right. This is where they detail the big capital flows. First off, BlackRock. They're noted as continuing to buy Bitcoin.
Still buying. How much this time?
Another 2,454 BTC. That's valued at over $262 million. Just consistently adding.
Wow, okay. BlackRock keeps stacking. Who else?
Galaxy Digital gets a mention. They apparently staked $63 million worth of SOL pretty quickly within 6 hours.
Staking $63 million SOL fast. What does that suggest?
Well, staking usually means committing tokens to help run the network, often for rewards. Doing it that fast might signal they see a good immediate yield opportunity or have strong conviction in SOL right now.
Okay. And there was something about FTX.
Yeah, the smaller note, but FTX reportedly moved about $39.7 million to cold storage.
Cold storage, just moving funds offline for security, right?
Exactly. Pretty standard for large entities, but always notable when it involves FTX, given their history.
Right. But the report really seemed to emphasize one particular move with Ethereum.
Oh, absolutely. This was the standout. The report highlights a massive ETH accumulation by a single whale, could be one person, could be an institution.
How massive are we talking?
$2.5 billion worth of Ethereum accumulated by one entity.
2.5 billion by one whale.
Yeah. And the report explicitly states this is the largest single-day ETH purchase since 2018.
Since 2018.
Okay.
Yeah, that's a major signal the report is trying to send. Someone with very deep pockets just made a huge bullish bet on Ethereum.
That's certainly how the report frames it, a potentially market-moving event showing extreme conviction from at least one major player.
Definitely something to keep an eye on.
Yeah.
And Metaplanet hit a milestone, too.
They did. The report notes they've now accumulated a total of 10,000 Bitcoin on their balance sheet, following that MicroStrategy playbook, you know?
Right, the corporate treasury strategy.
And their latest buy mentioned was 11,112 BTC at an average price around $104,760.
Okay, so we have clear examples of big institutions and public companies buying up BTC and ETH. But the report also showed the other side, right? Notable exits.
Yeah, gotta show both sides. They point out an early ETH ICO participant, someone who got ETH way back at the initial offering.
Like ancient history in crypto terms.
Pretty much. They sold 2,000 ETH, worth about $5.13 million. And the key detail is these coins hadn't moved in almost 10 years. 9.9 years, to be exact.
Wow. Nearly a decade hold. That's diamond hands finally letting go.
It really is. And then on the more speculative side, they noted a large PPE whale.
The meme coin.
Yep. This whale deposited 595 billion PPE tokens, worth around $6.5 million, onto the Binance exchange. The report suggests they locked in about a 32% profit.
Okay, so smart money accumulating majors, some very old hands taking ETH profits, and meme coin traders cashing out gains. Gives a sense of the capital rotation.
Exactly. Now, tying back to that high-risk assessment, the report then pivots to spotlight protocols that are actually generating revenue.
Right, moving beyond just price and flows to the underlying business activity. Which ones do they highlight?
They look at both established and emerging players. Among the established ones, Hyperliquid gets a mention.
What about Hyperliquid?
They apparently hit a $2.1 billion all-time high in open interest on their derivatives platform. That's a lot of trading activity. And crucially, the report notes they have direct revenue sharing with their token holders.
So platform usage translating directly into yield for users. Okay, who else?
Spark is mentioned. They manage $6 billion in total value locked, or TVL.
$6 billion TVL. That's substantial.
It is. And the report estimates this TVL is generating about $172 million in annual yield. Basically, income from the platform's lending or other DeFi activities.
Okay, $172 million annual yield from Spark's $6 TVL. Jita was on the list too.
Yep, Cheeto. Report shows them generating around $29.3 million in annualized revenue, mostly from fees and something called their tip router, which relates to transaction processing on Solana.
Got it. And Metaplanet popped up again, not just for holding Bitcoin.
Exactly. This time, the report specifically calls out Metaplanet generating $5.2 million in revenue purely from trading Bitcoin options.
Ah, so actively using BTC for financial operations, not just hodling.
Right. It shows a different angle on corporate adoption.
Okay, those are some established players with revenue streams. Did the report mention any up-and-comers in this area?
It did. They highlighted one called Inferium.
Inferium was their story.
Report projects over $300,000 in annual recurring revenue, ARR, for them. That's based on current activity, suggesting a consistent income stream. They also mention over 1 million users and backing from known projects like Fetch.ai and Oasis Protocol.
So decent projected revenue, user base, and some notable backers. It seems the report is really pointing towards projects with tangible economic activity.
Yeah, that shift from just pure speculation towards, actual business models seems to be a core theme they're flagging.
Makes sense. Okay, shifting gears slightly. What about emerging narratives? What themes does the report see gaining momentum right now?
So they identify a few key areas where they see increasing focus and development. First one is the AI agent economy.
AI agent economy. What does that involve in the crypto context?
The report describes it as moving beyond just AI-themed tokens. It's about crypto projects actually using AI agents to perform tasks, generate revenue, interact economically.
Okay, AI doing actual work within crypto systems. Any examples?
They mention Virtual's protocol launching something called an agent commerce protocol, and another project, Stratos, apparently manages 24K in TVL, but offers a 20% APY yield that's specifically generated from options trading performed by AI agents.
Interesting. AI actively trading and earning yield. What's the second narrative?
Bitcoin L2 infrastructure, layer 2s for Bitcoin.
Right, building on top of Bitcoin to add more functionality. Is interest growing there?
Seems so. The report flags growing interest. They mention Cetrea is hosting a Bitcoin Research Day on June 26th, and they also note multiple new Bitcoin staking solutions popping up.
Staking for Bitcoin, allowing holders to earn yield or participate more actively, makes Bitcoin potentially more versatile.
That seems to be the idea, making it more than just a store of value.
Okay, and the third narrative they highlighted.
RWA tokenization, real-world assets.
We hear a lot about RWAs. What's the report's angle?
They see it accelerating, like
Yeah.
significantly. They highlight a project called Plume, saying it's quickly become a leading RWA-focused blockchain.
And are they just focused on real estate?
Apparently not just real estate anymore. The report says Plume is expanding to include tokenized GPUs, gold, even equities. So broadening the scope of what traditional assets get brought on-chain.
GPUs, gold, equities, tokenizing more diverse assets. Okay, so AI agents, Bitcoin L2s, and RWAs are the key narratives the report sees building steam.
Pretty much. Themes tied to actual utility, value generation, or bridging traditional finance. Fits that overall picture.
It does. The report also did a sort of health check using TVL movements, right? Where value is flowing in or out of specific protocols.
Yeah, tracking total value locks can give you a quick pulse check. On the growth side, they highlighted Lombard.
Lombard, what was their growth?
Hit $2 billion in TVL in just 6 months, which is, incredibly fast growth.
6 months to $2 billion TVL. Wow, that's explosive. Anyone else growing?
Bunny apparently reached a new all-time high in its TVL, passing $15 million, and Fragmetric hit a $300 million TVL milestone. So positive signs for those specific platforms.
Good momentum there. But it wasn't all growth, was it? Did the report mention any contractions?
No, it pointed out some struggles too. Berachain was noted for a rapid TVL drain.
Ouch. Did they say why?
Didn't specify the exact cause, but said it forced them into a BIRA to USDC pivot, which sounds like a significant strategy or tokenomics change.
Okay, so Berachain facing challenges. Anyone else?
Polygon ZK EVM. The report mentioned a network shutdown that also involved failures with their bridges, the things connecting it to other networks.
Network shutdown and bridge failures.
Yeah.
That's definitely not good for user confidence or activity.
No, definitely not. So it shows the dynamic nature. Some projects surge while others hit roadblocks.
Right. It's not all up only. Now, beyond existing protocols, the report also looked at new projects entering the space, especially those getting institutional backing.
Yeah, they track recent funding rounds as a signal of where venture capital is placing its bets. Towns raised $25 million.
From who?
High-profile VCs, Founders Fund, and Sequoia.
Okay, Founders Fund and Sequoia. Getting their backing is a pretty strong signal.
Definitely carries weight. Caldera and Espresso also raised $15 million from those same two firms.
So those VCs are active in this space right now. Any other funding rounds?
DefX got $2.5 million in seed funding. And then there was Sahara AI, which had a really notable community raise.
Community raise, how much?
Over $74 million, which, the report points out, was 870% over their target.
870% over target from the community. That's incredible grassroots support.
It really is. Shows a different kind of validation alongside the traditional VC funding.
Yeah, two different powerful forces backing new projects. Okay, so that covers new entrants. What about the immediate future? What did the report flag for the next, say, 7 days?
Okay, upcoming events. They flagged several key dates. First, TGE's token generation events.
When new tokens launch? Who's launching?
Spark, SPK token, is scheduled for its TGE today, June 17th. The report mentions a USDS staking requirement associated with it.
Okay, Spark today. Anyone else this week?
Matchain. They have a Binance Alpha listing scheduled for June 19th. Listing on Binance is usually a big deal for visibility.
Right, high profile. So new tokens hitting the exchanges. What about actual product or platform launches?
Floki Valhalla, their game, I believe had its global launch yesterday, June 16th. And Room has a community sale happening on June 18th, hosted on Virtuals.
Okay. launches and sales,
Yeah.
and unlocks. When locked tokens get released, that can impact supply, right?
Absolutely. The report lists some potentially significant unlocks. Arbitrum has about $31 million worth unlocking next week.
$31 million for Arbitrum.
Okay.
Sonic has over $5 million worth of tokens being minted or created within the next 7 days.
Mm-hmm.
ApeChain also has over $5 million scheduled for unlock.
Mm-hmm.
And then both Celestia and Jito have daily unlocks starting now. They're releasing over $1 million worth of their tokens each day in a linear fashion.
Wow. Daily unlocks of that size for Celestia and Jito, that's sustained potential sell pressure to absorb.
Potentially, yeah. Or it could just be absorbed by demand. But it's a supply event to be aware of.
Definitely. So it sounds like a really packed week ahead. TGEs, listings, launches, and some pretty big unlocks happening.
It is, and the report layers the broader macro context on top of all that.
Ah, right. The wider economic and political events. What did they mention?
Well, the FOMC decision on interest rates is on Wednesday. Always a huge market event, and it coincides with some of these launches and unlocks.
Yeah, Fed Day always shakes things up. What else?
There's also a mention of the Senate stablecoin vote. Specifically, the final vote on something called the Genius Bill, scheduled for Tuesday afternoon, 4:3 p.m. Eastern. Okay, a stablecoin bill vote. How did the report frame that?
Just neutrally. Listed it as a key legislative event to watch, given its potential impact on regulation. No stance taken on the bill itself, just flagging it.
Got it. Important context. Any other macro points?
One interesting international note, a legislative committee in Brazil apparently approved exploring Bitcoin for the nation's reserves.
Brazil looking at Bitcoin reserves. That could be significant if it moves forward. A potential sovereign adoption signal.
Exactly. The report included it as a sign of that developing trend.
Okay, so a really busy week with crypto-specific events like TGEs and unlocks, plus major macro moments like the FOMC and that Senate vote, and even potential sovereign adoption news. It's a confluence.
It really is. A lot happening simultaneously.
Finally, the report just briefly touched on trading signals. More as examples, right?
Yeah, exactly. It wasn't giving advice, but showing how the analysis translates. It listed examples of what they saw as good risk-to-reward trades, like specific long setups for BTC and SOL using Bybit perpetual contracts.
Okay, examples of trade setups based on their analysis.
Right. And it also had a section called Ultra Early Alpha.
Ultra early alpha.
What's that? Really niche early stage stuff they're tracking. Things like a Backroom IAO, an initial agent offering related to that AI theme,
Yeah.
a mint for something called Navigate AI, and investments in robotics projects like Prismax, Frodobots, and Reborn, which were apparently identified by the VC arm of Virtuals.
Okay, so very early, potentially high-risk, high-reward areas they're monitoring. Good to know they track that level too, even if it's not actionable advice for most.
Right. It just shows the breadth of their scanning.
So let's recap what we pulled from this daily alpha report. We saw huge institutional inflows driving the market, that massive $2.05B ETH whale purchase, the curious lack of retail excitement despite price gain.
The focus on revenue-generating protocols like Hyperliquid and Spark and emerging players like Ethereum.
Yeah, and those key narratives gaining steam. AI agents actually doing things, Bitcoin L2s adding utility, and RWA tokenization expanding beyond just real estate.
Plus, the TVL shifts, showing growth in Lombard but struggles in Bear Chain and Polygon ZK EVM, and the new funding for projects like Towns and Caldera.
And then that really packed upcoming week. TGEs for Spark and Mat Chain, major unlocks for Arbitrum, Celestia, Jito, and others, all happening alongside the FOMC decision and that Senate stablecoin vote.
It really paints a picture, doesn't it? A market heavily influenced by big money, focusing more on fundamentals like revenue and utility, but also with a lot of potentially volatile events just around the corner.
Definitely. Distilling a report like this helps cut through the noise and see the key signals they're highlighting, where the money's moving, what themes are hot, and what events to watch.
Exactly. So hopefully diving into this specific source gives you a sharper picture of the current landscape, at least according to this one analysis.
Right. It provides that structured snapshot of this moment in time.
So to leave you with something to think about, based purely on what we discussed from this report, given that the report highlights the strong institutional buying, but notes the absence of retail euphoria and flags risk as high while pointing towards revenue plays, how might this unusual setup, big money buying quietly without the usual crowd hype, shape things differently in the near term compared to, say, a purely retail-driven rally? What kind of market action could result from that specific dynamic?
That's a great question to ponder. How does this institution-led, low retail hype environment actually play out? Something to consider.